Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, it is Thursday, and the market, well, it's properly. It's down again today, and who knows where it's headed from here. But not looking good in terms of the overall market. Just kind of a down day today. And there was a modest bounce on Wednesday, but not looking quite as good as it has been looking. Just wanted to kind of go over some of the numbers here for the indexes. On the Dow, we were down, yeah, just a tad, 0.47, almost a little less than a half percent. On the Dow Jones, almost a percent, and then of course, on the Nasdaq, a full point down. So that's not what we want to see, but it is definitely what's going on here. So without further ado, let's get into some of the numbers here and take a look. All right, I have an interesting chart here. This is the major indexes since 2000, since the beginning of the month, and as you can see, if you're looking on YouTube, the only index that's sort of doing really, really well, of course, is the is the index, which is the which is the XLE. So let's take a quick look at that. There we go. Basically, what's going on here is that the XLE, that's the red line, has definitely been outperforming the rest of the market, and just that's part of the reason the only stocks really I'm in right now are in stocks, and that's because as you can take a look from the indexes here, they're down basically for on all three indexes. So not necessarily the greatest setup that you'd like to see. So that's part of the reason I've been so bullish on the oils. Really, the only thing you can see there. I want to also show you this chart, and this chart is the performance since the first of the year with the major indexes and sort of where they're located and what they're doing. If you look at this, you can see that the XLE, which is the Energy Select Spider, that one is up significantly. The Dow is actually down for the year. So is the S&P and the Nasdaq. So technology is in the basement, and it seems like energy is that's the best. Just wanted to show you kind of what I have in terms of stocks out there right now. Basically, Petrobras, that was down today. BJ's was down today. As a matter of fact, everything that I had was down today. I have 6 stocks, they're all down. GLNG down, Oxy down, LNG down, and DVN down. So just not what you want to see when it comes to that. You want to see more green than red, and unfortunately, right now it is a red day. So not exciting when it comes to that. Kind of a red day there for everything that I basically have. So hopefully your results were different, but I doubt it just because the whole market seems to be pulling back. Taking a look at the small portfolio, as you can see now, this is not all the stocks, but the demonstration portfolio that I trade typically. I have a large position in it's down as as well as Petrobras, which is the Brazilian national oil company. So kind of disappointing all the way around here. But hey, you know what? You got to take the good with the bad sometimes. And definitely today, it's not been the good. So just like the old thing with Clint Eastwood, the good, the bad, and the ugly. Well, it's mostly been the bad today with stocks. I still am fairly lightly. I'm still fairly lightly exposed to the market, but it's I may have to get even lighter as we as we say. All right, this is a question from Charles. Thank you so very much, Charles. I always like your questions. Don't you love this volatility? Well, actually, I can give some more. I wish that wasn't the case. Let's look at the VIX. Let's see if I have a good chart for the VIX here. And of course, this is the volatility. if you're not familiar with it. Okay, let's see if it's going to let me do that. Zero fix. Yeah, there we go. This is the CBOE, the Chicago Board of Trade VIX index, and as you can see, wowie kazowie, this is on the daily chart here, and let's zoom that over for everybody watching on TikTok. It is just absolutely a it is just absolutely volatile, just really kind of a rough day. And let's go to the monthly chart, kind of give us a little bit of a 20,000 square foot view. You can see this is just volatile all over the place. So even the VIX is volatile. Wow. I mean, this is just a lot of volatility in the market. So just not able to get much of a trend. You get in the trend, looks good, and then boom, you're reversed out just like today. So it is a tough market to trade. So unfortunately, probably some of your better strategy here might be to be a little bit light, lighter in the market than you normally would be, just because it is very, very, very volatile out there. So just tough market to trade. Jim, DVM pulled back when I entered. Will it surpass its all-time high? I think it will, Jay. Let's look at. I recommended this stock, and I own it, by the way. DVN. I bought it, so I'm trying to eat my own dog food as much as I possibly can here. DVN is, it did pull back a little bit after hours, but it was up today amazingly. Well, I'm sorry, wrong answer. It was down today. 60. I entered here basically on DVN at a half position at 70.30, which is basically the 70-day line. It pulled back to 69.48. Ouch. And then it's down to 69.35. Will it make the move up? Well, let's look at the 5-minute chart. It's not looking selling at the end of the day, so hopefully we'll get a reversal here. I think it should, but shoulda, woulda, coulda is sometimes all you can say. Right now, this is the 5-minute chart, so I definitely think it's getting some support right about 69, 69.50. That's kind of where I think we're seeing we're seeing some of the support come in there is right about here. But of course, this is a 5-minute chart, so it doesn't really show a lot. But I definitely think we're getting some support here, and hopefully tomorrow it will be an upward trend. Who knows? But I do like the stock for a lot of reasons, and we'll kind of go over some of them here. One of the things is that it's sort of in the right sector. As I've been saying, it's got a 100% checklist, which is very good. There's very few 100% checklists out there in this market. On the technicals, it is basically very, very close to the 21-day moving average. Definitely always try to buy close to that 21-day if you can. Typically, that's what the programmatic traders trade off of. So it's good. It's good in that respect. It's close to that 21-day line. So that's a good place. On the pattern recognition, we are basically 8% below the pivot, which is a cup with handle, which is the best of the basing patterns actually, but it's a stage 3. So that looks good too. So I definitely think we're going to likely to get a bounce here, probably off the 21-day line. I'm hoping tomorrow. Right now we're just above it. We're at 1.10% above the the 21-day line. I've been apparently all year for it to enter the market, but when will this plate stop? Boy, I wish I knew, but I definitely think here's the thing, and this is anecdotal, so take it with a grain of salt. But here's the thing: September right now is one of the worst months. Now, I suspect if history is a guide, this has been going on since about 1900. I'm looking up my notes here, but basically September is probably the worst month in the year. I suspect that we get to the end of September, we're going to start to see a little bit of a pickup towards the end of the year. I'm hoping that is the case, but you never know. So right now we're sort of, traditionally this is September. Traditionally is the worst month, but you never can tell. You never can tell here. We are in a cyclical down market right now, so not a great place to be. But we're just in one of those. We're just in one of those markets. All right, let's see. Let's take a look. EV charging stocks. Yeah, EV are up on a bad day. Yeah, I mean, there's ChargePoint, EVgo, and there's another charge. I've actually traded EV. I've traded all of these. Currently, not in any of them. But let's look at their relative performance. I think that's a good segue here is to look at some of the EV charging stocks. I'm really not as bullish on this, but because part of the reason I don't think there's a much of a mode on these. But let's look at EVgo. Look at EVgo first. Oh, and what I'm gonna do here is I'm going to do a comparison between EVgo. Let's see. This is from the first. I'm going to do it from essentially from the first of the year. I think it's the fairest way to do it. Right. Okay. On. Hmm. It just threw me an error. Let's see if we can get this to rock. There we go. Yeah. All right. So it's not letting me move it. I don't know why, but it isn't. It isn't allowing me to. Let's see. Let's see. There we go. Maybe we can see it there. Okay. So EVgo. Let's see, and let's look at charge point CRPT. I think it is CRPT. Is that right? All right, that is and Blink. Let's look at Blink. BLNK. Oh, right. Well, doesn't yeah, Blink's on there. It's amazing. I can't even see it. I guess it's done. Is that right? Oh, I guess it's done. Okay. Charge point. Charge point. Yeah, there's charge point. All right. So let's take a look at and compare both of them. Charge point with EVgo. These are the two. These are the two EV stocks currently. And share that out. Oh, there we go. So here is the comparison of the EV charging stocks. As you can see, EVgo is the one. ChargePoint is definitely the laggard here. EVgo had a pretty good day today. I don't know. I'm just really not as bullish on these. And here's the reason why I'm not bullish on them. They don't really have anything special going for them. Uh, an EV stock charging company could just start up just willy nilly. It would be really easy. And I suspect if there's going to be any competition with the oil companies will just jump in and create these too. So I'm really not very bullish on the sector at all. It's just one of those things. I'm just not. But it is interesting. It definitely is interesting to take a look at them. But I'm not really very bullish on the EV charging sector. I just really am not because I think it's going to be very easy to enter that sector with nothing in particular significant. So that's one of the reasons why I'm avoiding these stocks right now. Just that just the way it is. Just the way it is. Let's take a question from Christine Rodriguez about Tesla, and of course, Tesla has been a great stock. I definitely have traded it quite a bit. Not so much this year. I've been sort of on the sidelines this year with Tesla, more so than the other stocks. But the problem with the problem with Tesla currently is that it just isn't doing it's having trouble moving above the 300-day moving average. So I probably would not be a buyer here, even though it's up at 300. I just think that there's a lot of resistance at this level. I think that there's a lot of resistance at the $300 level for um, for Tesla. And so what's going to happen is that every time it's going to get up to about 300, people are going to sell the stock that they bought up here at 400 and 402 and 414. This is what they call overhead supply. Let me just shift the camera here for TikTok to show this. But here's what I'm seeing with Tesla. You've got this you've got this really this resistance ceiling here at about 300. So until it can move up above about 314, I don't think it's necessarily going higher. Let's just take a look at the checklist on it. I don't think the checklist it's getting better. So the checklist is 78%, very good. I definitely buy 78 checklists, but it's still a little bit off of its all-time high. I want to see it closer to its all-time high, and I also want to see its EPS over 80, rating over 80. So it fails in those two accounts. So currently, I am not looking to move into a position in so, but that may change. So, just keep watching. JAKK. I'm not familiar with JAKK. Charles, let's see if I can jump on over there to that and see. JAKK. Let's see. Let's see. Jax Pacific. I don't know this one. Manufacturers include. Oh, it's okay. Toy vehicles. Okay. I am not familiar with this, but it's in the toy and leisure games area, which that's probably the one thing in a downturn. Children are going to still have their toys. Definitely when it comes to that. It's got a 98, 99 relative strength. I like the fact it's doing that, but it's way extended. So here's the thing, just basically just off the top of my head on this one, I probably would not buy this one just because it is extended. So um I think that you're especially in this market, we're in a downward trend. I think you gotta buy the best of the best stocks, absolutely, but I think you gotta buy stocks that are not extended, and this one is extended. It's got a pretty good, checklist, 78%. On the pattern rec, we're basically 40% above the cup, which the pivot was, 1691. So this is extremely extended. And I would just be super duper careful when it comes to extended stocks. I think you just got to take a pass in this environment. It's just too difficult to come out with something that is not going to work. And it's painful, but I just think you got to let this one go away. I mean, I think you just got to let it go. Are you a buyer of Shiba Inu? No, I am not. I am not a buyer of crypto at this time because crypto is probably going to go lower. And I'm going to get interested probably in crypto once again when Bitcoin hits about 8,000. I think it will happen probably within the next year. So we'll see. But right now, I'm out of the crypto market. I just very tough. Um, very tough. Okay, how's the RSI? I would really recommend avoiding charge point because I think you can get clipped on that one. But I'll show you the RSI. CHPT, of course, is the charging stock. I think really right now the market is not favoring just it's not favoring tech. It's just not favoring tech at all. And the relative strength is pretty good, 93. That's pretty decent on this one. This was a kind of it's got a 67 checklist. On the technicals, it's okay. We're about 16% above the 21-day line, so I just definitely wouldn't buy it here. Maybe in the future, if it's closer to the 21-day moving average, maybe I would buy it. But I think what you got to be, CHPT is extended, so no buy. So I just think you need, right now, unfortunately, we're probably going to go lower. The market looks like it's going to go lower. I would not be a buyer of ChargePoint just because ChargePoint is extended, and yes, it's in a it's it you think, well, it's a no-brainer. They're going to have charging stations all over the country. I totally believe that is true, but there's a problem with that, of course, and that is the grid, and they can't handle it. And so I would be really careful with this one. Um, it doesn't have overall. Let's look at ChargePoint here. I'm gonna do this graph again. See if we can show it here. There's ChargePoint. Okay, Maybe this will let me go. Yeah, there we go. Okay. So this is ChargePoint. Let's look at the competitors to ChargePoint here, and it's taking a second for it to refresh. So that little wheel hopefully will stop turning here in just a second, and we'll compare ChargePoint with Blink Charging and with EVgo. And those are really the three ones that I have experience trading. But the problem with this set course is that it's so easy to buy. It's so easy to make these companies. There's not a lot of maybe if there's a consolidation, that might work. Well, goodness gracious, I just does not want to let me. For some reason, is having trouble pulling this. But anyway, ChargePoint, very volatile. I just would not be at this point. I just wouldn't be a buyer of ChargePoint. I just wouldn't be a buyer of it. All right, let's take another question here, quick. Boyle, is it still a good buy? Good question. Let's look at Boyle. BOIL, and this is the ETF that is related to natural gas. I am very bullish natural gas right now. It has pulled back and it pulled down again today to the 50-day to the 50-day moving average. The relative strength though is 98. So let's compare this with the natural gas index to see. This is the ETF, of course, that covers the that covers natural gas. But let's see if we can put in let's see if I can put it in here. Zero nat gas. Uh, there we go. So this is Boyle, which is the Boyle, which is uh, the ETF that covers natural gas prices, and this is the actual price of natural gas. So pretty similar, but actually, believe it or not, the actual natural gas is outperforming this. So is this still a good buy? That's the crux of the question. I would be careful buying this here. I would wait. I think there's some better opportunities. What I'm doing here is I'm drawing a trend line. So I think you need to wait until it moves above 140. Here, I think your better play is to go with something like an LNG, which is transporting the natural gas. Let's take a look at that. That was off today, but it's been moving higher. As you can see, I purchased it at 165 here. We're up a little bit from that. We're at 171. And I purchased that a few days ago. I do like this one as the natural gas play rather than Boyle. This is a company that's basically a transport company. I mean, that basically takes the natural gas and liquefies it and then puts it on ships. I like this one. This is looking at the weekly chart because of this relative strength line. It's headed north, and it's a little extended here on the weekly chart. But one of the things I think you can take a look at here is the sales increases that they've had, and of course the profitability. They're just starting to get profitable here. So I would recommend, as opposed to Boyle, I think you're better off with either some of the shippers, the natural gas shippers like GLNG or FLNG, or LNG, which is actually um, the shittier the liquefier of it. So that's what I'm thinking. That. All right. Let's see. Let's look at for Charles. Visit VIST. And let's take a quick gander. Vista Energy. I like the ones that you're looking at. Definitely. This is a Mexican-based company. I like this. This is a good chart. It's a cheap chart, but I like the fact that you're looking international on the oil and gas companies because I think that this is going to be a big area. And, it now is legal in Mexico to drill for natural gas and oil if you're not Pemex with the national oil company. So this is a big change in the Mexican. It was a Mexican. They had to change the Mexican constitution to do this. There's a ton of oil and gas in Mexico that has been just sitting there since the 1930s. And I think some of these companies that are exploring that are Mexican in Mexico have a really good future, and I'm very bullish on them. Right now, there's a pivot on Vista right here at about $10. about $10 a share. We were above that. We definitely have a little resistance at $10. It fell below that. But the question is, if it comes down to that 21-day line, I think it's going to reverse higher. This is a very tough market because it just, it's pretty unforgiving. But it's 78 relative strength. I like that. On the technicals, we're we're only 1.67% above the 21-day line. So this is a good place. So I believe, I believe, Charles, that you have discovered another really good one. I'm going to put a little check mark there on that. I think you've really this is a good one. I think I think this is viable actually. Believe it or not, it's in the top of the market. So I like this one. Um, you know, I hadn't seen this one uh, before, but I definitely like this one. VIST. So very good. And I think it's viable here. I really do. I think you can. I think you can buy. I think you can buy this one. It's got a nice chart. It's coming up to the pivot, and very very good on that. VIST is the symbol for Vista Energy, SAB.CV, and it's based in Mexico. And they do production of oil and gas in Latin America and in Argentina. So very nice. I definitely like that. I definitely like that symbol. So very nice. Very very nice. All right. Let's see if on Antonio. Any thoughts on Yeti? This is a lifestyle company, of course. Yeti coolers. Based in Austin, Texas. I don't have any Yeti stuff. It's kind of too pricey for me. I mean, I'm a cheapskate, so what do you know? Well, don't follow me on that. YETI. I think a lot of these um, lifestyle brands have been having issues. Unfortunately, this is the kind of the trend. Ouch. I wish this were a better trend. This is a downward trend. We're below the 200-day moving average. It's got a relative strength of 8, so that means that 92% of all the shares on the market currently are doing better than Yeti. So, gosh, I wish I had better news for you on that. Just not does not look like a winner here. 4 out of 9. That's just not a good. That's just not a good chart. Pattern rec on this one. Yeah, it's 66% below the last pivot, so this is just not doing well. I think you just gotta. I think you kind of avoid it, unfortunately. Now I'm not now the way I trade, I'm not a great bottom fisher. There's some people that are great at bottom fishing, not me. I have to say that Yeti is not a buy. I just think you got to avoid this one. It just really isn't. It really isn't a buy. So Yeti, which I spelled incorrectly, if I get that right. Yeti just isn't ready. Yeti. So Yeti's not a buy. Really isn't a buy. This is a bad chart, unfortunately. But I appreciate you bringing it up. Absolutely, Charles. U.S. is opening 100 million acres of oil leases. Who will benefit? Well, a lot of the domestic producers are going to benefit. A lot of the domestic producers. This is a good question. I primarily focus in, of course, on the Texas market, which is primarily the Permian, but there's also some other large oil fields here. But basically, a lot of companies will benefit, and there'll be the domestic companies like Occidental should do well in this market. Range Resources, Devon, and a number of them. So they definitely, finally, I mean, this is the kind of thing I think that we need to see are oil leases basically coming available. Now, one of the things about it is that there's a lot of oil on private lands that they've kept off the market. They've made it difficult to trade, and those also are significant when it comes up to that. But I think the fact that the oil leases, these are going to be leases on federal lands, so you're going to see them primarily, in the western states, I suspect. Um, Interestingly enough, Texas has very little federal land. Interestingly enough, California, Nevada, those states have lots of federal land. So you would think that the wide open spaces would be in the western part of the United States. There are white spaces, but it's mostly owned by the federal government. So that's the thing. Most of the big production in the oil leases has been off of the federal lands. Now, hopefully, it'll open up the some of the leases in the Arctic in Alaska. There's a ton of them up there too. So a lot of potential up there. But I definitely think it will benefit most of the smaller companies primarily Occidental. Occidental and I also think, Exxon probably will get a few of those leases as well. So, kind of, definitely will benefit the market, I hope. WTI, let's look at that for Charles. WTI. Is this West Texas Intermediate? I'm sorry, offshore. You're looking at definitely the right thing. Interesting stock. This is a relatively inexpensive stock. Below $7, below $10, I don't really usually cover them as much. But right now, with the condition of the market, oil and gas is really the place to be in the market. So definitely think that this has some potential. Look at that. We've got a 98 relative strength. We've got buying coming in like that. Very nice earnings. Let's look at the weekly here. Look at the longer term trend. Yeah, and their sales are up 106% in the last quarter. Their profits are up 1,000%. That's incredible. 46% are funds. I'm not familiar with this company, but they have good cash flow. They have a PE ratio of 5. That's pretty amazing. That's pretty amazing. Let's take a look to see if this checks some boxes. Let's look at this 60. That's not bad. 68%. Of course, it's lower than $10. So this thing comes above $10, that will drop off there, and it's 15% off of its all-time high, and the earnings. So this is doing okay. Let's look at the monthly. I just want to see kind of where. Yeah, it's starting to come back here. It really, the key point here that it needs to move above, of course, is $10 on this one. But 98 relative strength. I definitely think this is watch list worthy. Good stock. Good stock on the roll. I probably would not buy it right at this time just because I'd like to see a little bit more strength. Let's look at ConocoPhillips. COP is the symbol there. Yeah, I think a bet if you're looking for a stock to buy is ConocoPhillips. I know that this company's been around forever and a day, but this is really checking the boxes off. And I also like how a lot is out and on relative strength. Pattern rec on this one, very, very good. They're basically right at the pivot. And let's look at the technicals. We're just a tad above 5%. So this is not a bad place to buy it. I want to compare this one right now. I haven't bought these yet myself, but I'm looking at ConocoPhillips, and I'm also potentially looking at Hess as ones to buy. Yeah, Conoco is definitely outperforming Hess, so that's very interesting here. Just that kind of gives you an idea. I kind of want to look at the numbers for Hess just really quickly. GS. And this is a large company that you may or may not have heard of. This is right below the pivot too. These are both well set up. So kind of digress there a little bit. So that's kind of what I'm doing here. All right, Charles. Oh, let's take. Is XLU and XIV gonna hold up? Well, let's compare. Let's look at them. Let's look at them. Basically, everybody, what Lost in Love is talking about here is the Spider Select. So let's first look at the XLU. That's the utilities. This is typically the least. This is the most defensive of all of the of all of the the select spiders. So let's look at this one. Actually, a little bit down today. Let's look at also look at XLF. This is the financials. The banks, and of course that's underperforming. We all know that. But let's look at the one that I think is the best still, and that's the XLE. And of course, that's outproducing them all, right? So financials here, utilities here, energy here. So I think this is where you got to be in the market is in the energies. I think that these are starting to flatten out here. Um, if you'll notice, these are kind of it's going up a little bit, but not as much. A little bit, not as much. This has a much better trend here, XLE. So comparing these sectors, I think you really got to still just kind of stay in the energy because I think that's where it's at, and you got to be selective because yeah, um, it's just one of those things. Okay, let's see. TA. Well, I think it's probably a good idea to always to look to take profit, especially in this market. Because I think, unfortunately, we're probably going short. I wish that wasn't the case, but I do think we probably are. Yeah, Travel Centers of America, another great one. Yeah, this is good. You know what? Boy, if you bought this right, and I think it looks like you probably bought it right down here. You probably bought it. See, if you bought it on the reversal, let's look at that. I don't know where you bought it, but I suspect if you're a canceling trader, it looks like you might be. You might have bought it when, when the 50-day line started moving up to the 200 line. By the way, this is doing very, very well. Whenever the 50-day line moves above that 200-day line, that's what they call the golden cross. That means that the stock is appreciating very nicely, and it came up and then copped out. So this is looking very good. Here's the thing. Here's what I would do. I wouldn't sell it right now. What I would do is I would set my stop loss basically at the low of where it started today. So what I would do just to make sure that you're gonna get the money is I would set a stop loss right about at the 21-day moving average, which is about 54. And the reason I would do that, yeah, 54.84. That's where the 21-day line is. That's where I would set my stop loss. I would set it right basically at that line. And the reason I was because that's going to be where it's going to get its support. So I wouldn't do anything here yet, but I would put my stop loss at the 21-day line, and then possibly start moving it up. And then when it pulls back, you're gonna get hopefully a little bit of juice there. So hope you will get the juice there. Well, I'm almost out of time. Let's see if we can take some more questions from TikTok. Okay, and let's put on my ugly mug here so we can all see. All right. And Microsoft, is Microsoft a buy? No, I don't really think it is. Let's take a look at the chart and show you why I don't think Microsoft is a buy right now. I just want to show you this because I think it's really important that we're not buying NASDAQ stocks right now. MSFT, of course, is the symbol for Microsoft. And back in 2008, 17, I was making great money on this stock. Just not the time for it right now. And here's why. This is Microsoft. It's trading below that 200-day. It's trading below that 200-day moving average. That's this black line here. Yeah, it's trading below that 200-day line. It's also trading below the 50-day line, the 21-day line, and the 10-day line. So basically, we have what they call the stack, and the stack is upside down. They're going from high to low. You want low to high. You want you want to see an ascending chart. This is a descending chart right now, unfortunately. So if we were to look at it, kind of make it a little bit more simple, that's one of the things I like about this comparison chart, is it just shows very, very graphically kind of what's going on with the stock. If we were to compare that, let's say against the XLE, and the reason I'm using the XLE is because that has been the best performance this year. You can see this is tech down here. This is energy up here. You want to be in the energy. That's where the action is. The energy is still in an upward trend, even in this downward market. The tech, unfortunately, is in a downward trend. So, I would not be looking at. I would not be looking at Microsoft at this point. I just wouldn't. Unfortunately, Twitter trade the volatility. Well, yeah, I mean you can definitely do that. I'm not a day trader. I'll be honest with you. I am not a day trader. Ah, I am a swing trader because I find that it's very difficult to trade better than you know than the algorithms out there. All right, let's take a look at one stock. that has been doing well, and that's in the agriculture chemicals area. And let's see, that would be, I'm just trying to think of this off the top of my head. In the fertilizer space, I know that nutrient, let's take a look at nutrient NTR. See this stock, yeah, nutrient, it's pulled back a little bit. Let's look at nutrient. Uh, let's look at LTR. I'm looking at fertilizer stocks right now. That's what I'm doing. No, I don't. Mosaic. No, yes. Look at Mosaic. That's also another fertilizer stock. Mosaic is doing a little bit better. And then um, CF Industries. I think that's probably the best of the best of the breed. Yes, it is definitely. So let's look at CF. Let's look at this since the beginning of last month. That would be 8/1. So what I'm trying to do, look here, and let's look at this really carefully. These are the fertilizer here, basically, and you can see since, and this is in the last 2 months. This is um, since um, uh, August and September. So you're about halfway through. So this is the last 6 weeks of the fertilizer stocks. The best performing is CF Industries, but they're all kind of clustered there. So that's pretty interesting to me. Do I like this group? Yes, I do, even though it's fallen a little bit. Agricultural chemicals, I think we're going to have a situation this year with agricultural chemicals that are going to be difficult. Part of the reason why fertilizer is going up so much in price, this is kind of a technical reason, is that most of the fertilizer that is made puts nitrogen into the soil, and it's actually made from natural gas. And so, with the natural gas prices going up, we're starting to see obviously more expense when it comes to fertilizers. Many of there's going to be a problem next year with harvest because many of the farmers are not putting fertilizer on primarily because of the price. So this is also going to exacerbate food inflation probably the next 180 days. So that's one of the reasons but we can fight back against that, of course, by trading the underlying the underlying commodity, which is fertilizer. And one of the areas, of course, is with these stocks, but they're relatively thin, and I think you just got to know that they're relatively thin. So, but CF is definitely the best of the breed right now, and it has pulled back to the 50-day line. I definitely think it's getting some support there. It was down a little bit today. It's about $100 a share. Interesting company in that they basically are primarily in North America, but they produce fertilizer. And of course, the feedstocks for this is natural gas. So if we look at the price of these fertilizer stocks, let's take a look and compare them against the price of natural gas, because that's the key feedstock. So showing, as you can see, as the price of natural gas, it almost mirrors it. As the price of natural gas goes up, the price of fertilizer stocks go up. See that? And they sort of mirror that situation. So if as long as we have high natural gas prices, we're going to have high fertilizer prices. That's just the way it is. Okay, well, I'm almost through jabbering here. Let's see if we got any more questions. Then I'm probably going to have to call it a day. But thank you so much for taking a look at the show today. So appreciate it. We're on every day at 5 o'clock. Let's also, if you're not already a member of the Action Trailer, it's super duper easy to get on that list. Just go to www. Dallas Trading Floor. Now, also, and I tell this every day, but please, please, please like our show, like and subscribe if you're on YouTube or on TikTok. We're also on LinkedIn and Facebook. So those are some other areas that we're on. So please uh, go ahead and like the show. I would please if you could do that. So hit that like, smash it, smash it, smash it, smash it, and I'll be back tomorrow at 5 Everybody, thanks so much and happy trading. And right now, it's a good time probably to be mostly in cash. Right now, I've been trying to move out into the market, but it's been pulling back. Right now, I'm really focusing on the commodities area of the market. I'm looking at natural gas and oil, but mainly natural gas because that seems to be where the action is. And also, but be very careful. I'm about 75% in cash right now, and I'm just waiting for a bottom. I think September's a very tough market to trade. Typically, September is the worst market since 1900. September has been one of the worst markets out there. So we got to kind of get through that, and I think we're going to see a bottoming, hopefully by October, November, and then possibly. And I know this sounds kind of weird. Everybody's going to be hating on me for this, but I think we could see a bounce, and I think we could see an up market because I think a lot of the damage has been done, and but we'll see. There's a lot of headwinds in the market, so please like and subscribe, and I'll be back with you tomorrow. Everybody happy trading.